Rajiv Bhaman, many thanks for joining us on the New Yorkers on CNBC TV 18. I was reading what Barron's has to say about you, and they say Bhaman uses mantra, mass influence, new technology, restructuring and aging to narrow his universe. His focus on valuation also sets him apart from other growth managers, as does his long-term view. Would that pretty much sum up your investment philosophy?
I think that's a fair representation, yes. I mean, mantra is a term we use as a marketing device to kind of explain to people in a simple way how we think about the world. I think it does a reasonable job, and I always say that, you know, we use the word mantra because it has resonance for me as an Indian, and also sort of mantra is what you do to achieve a higher state of consciousness, and we think that this allows us to achieve a higher state of investment consciousness. And so I think, yes, it's representative.
So how does the world look to you today in terms of the macroeconomic fundamentals? Globally, things seem to be looking better, both as well as far as the U.S. is concerned and emerging markets, you would say?
Well, I think it's a mixed bag, as it is always. I think the U.S. is further along in its recovery process than many other parts of the world. I think the emerging markets, again, are a mixed bag. We have a very confused, very difficult circumstance in Russia. We have a difficult political environment in Brazil. So both those markets, I think, you know, have the same sort of expectation in terms of hopefully things will change for the better. There's an election coming in Brazil, and so that the expectation of change is similar to the expectation of change that was there before the last election in India. India, we've sort of resolved things in the right direction. So I think, you know, the optimism is perhaps justified on one level, and you know, as far as China is concerned, you know, there's been a tighter control over Chinese growth than people might have expected, because the world has seen something different for the last decade and a half. So I don't know for sure that the emerging market's in a better position. In fact, I would say that it's mixed. And the rest of the world is also mixed. I mean, Europe is still undergoing a fairly difficult transition process out of a very bad circumstance. But they have structural problems that go, you know, beyond the current moment. And there needs to be a lot of things resolved in Europe that, you know, will take time.
But let's talk about India in specific. And you were talking about the elections, and that led to this hope rally that's played out in the Indian markets, and it continues. What's your own assessment of how much more room there is for upside, given the fact that perhaps a lot of what the government has done so far in terms of direction and policy has already been factored into the price?
So I think, you know, somebody was pointing out to me yesterday that what we've seen in India is the same old stuff do really well. It's the consumer stocks, it's the sort of popular things that have done very well. The cyclical, broader market sorts of things haven't. So that the index actually does not represent the market as a whole. It's a very narrowly grouped bunch of companies that have done well. And the rest of the place has sort of did well and then has come back. You know, so for instance, yesterday after the news from the Supreme Court around the coal blocks being deallocated, you know, lots of things got whacked. You know, banks got whacked, the companies that were allocated the coal blocks got whacked. If you look at those sorts of companies, the infrastructure companies, the, you know, somewhat highly indebted companies that were betting on infrastructure growth, I mean, they haven't done anything at all. In fact, they're close to, you know, 5-year lows or at 5-year lows. So there's been a mixed bag there too. I'm quite optimistic about India. I mean, structurally, I think there's an opportunity, which maybe is a once-in-a-decade type opportunity to actually fix a few things. But I think a lot of stuff does need to be done. You know, there's a show-me-the-money aspect that I think the market will demand. And I think right now, the safer thing to do is sort of buy the things that you were buying, you know, whenever you were buying them, which is over the last 5 or 10 years. You know, the big consumer companies and so on, the IT companies, exactly, you know, things that are not really dependent on India working. You know, many of them are not really dependent on India working. Some of them are dependent on the agricultural, you know, markets working well, which clearly has improved agricultural income for Indian farmers and so on.
So you wouldn't up your allocation for India just yet?
So I don't really think about things like that. We don't invest as such in countries. We look for businesses that we feel have long-term competitive advantages that we want to own, where we think we're advantaged. You know, either because we have some insight into something, or this is a business that we believe can be a globalized business or a global business where we're competitive on a global basis. Sometimes we'll own companies that are particular to a country because the gap between perception and reality is really meaningful. And where we find that sort of gap, we would invest.
Have you found anything yet?
Well, I'd rather not talk about it before we do anything, but from my perspective, I prefer to talk about things we own rather than things we don't own or we could own, just because legal requirements are such. But I think that people can look around and see. I think you must look at India on a sort of 10-year type basis. I think the stock market response, I think, is an over-response to a near-term circumstance, but to a long-term circumstance, it's not.
But in the near term, you believe the euphoria has been overdone?
Well, but the euphoria has been seen only in a small group of stocks. I don't think we actually have seen euphoria in the broader market. If you look at the broader market, it hasn't really shown up that way. I think there needs to be a lot done to demonstrate that the India that we expect to happen post this election is likely to happen in a time frame that the stock market tends to typically discount.
So what kind of appreciation would you then see as far as the Indian stock markets are concerned?
Oh, I would expect to see the market double yet again in the next 5 years. I mean,
double from these levels in the next 5 years?
Well, if certain things were done, absolutely. I mean,
So what would be the top 3 or 4 things that you would expect the government or companies to do in order for us to get there?
I think the government would have to get out of the way. I think, the most important thing is not be a hurdle. I think the biggest problem in India is the hurdle that is the government or the governments, I think, plural. Getting out of the way is a really important thing. Trusting people to do the right thing is important. I think, when you create trust in a circumstance, it responds. We believe this in our organization, and we believe this for the world. I think, India has always been about, well, we can't trust the businessman because he's concerned about money. Well, what's wrong with money?
So, coming back to the fact that you actually see the Indian markets doubling over the next 5 years, which are the sectors or the stocks in specific that you believe are going to drive this?
Well, I didn't say I believe the market would double. I said that the market has the potential to double if the right things are done. So what typically allows a market to grow is the availability of credit. I think, for instance, the financial system will benefit if the markets do well. So I think, well-run banks, of course, consumer companies will benefit, all the guys providing infrastructures. I think you can't grow India at the level that you need it to grow solely on the back of the consumer. I think you need to have an investment-led growth. I think guys providing investment capital, investment goods, those guys, at very depressed levels today because of, in the last 4 or 5 years we've done virtually nothing. So I think there's that opportunity. I think credit availability is very important. I mean, we've had the Prime Minister wander off to China, and not the Chinese come to India and go to Japan. I think, allowing long-term capital availability from these countries for infrastructure would really help. So I think infrastructure companies have a big chance. Provision of infrastructure goods, in my mind, is really the opportunity as far as companies are concerned. I'm not so interested in kind of the commodity type, builders or whatever. I think, real estate has a big opportunity because as people get wealthier, they want more living dynamics. So I think, broadly, I think there's a very good opportunity to have a very broad revival of Indian companies. And I think, if you allow the system to work and it doesn't work at cross purposes, with the Supreme Court saying one thing and the executive saying another and the legislature wanting something else, I think, there's a great opportunity.
Do you think, things like what's happened with the court verdict as far as the coal block deallocation is concerned, is that going to weigh on foreign institutional investors when they're looking? Because this is the second time in the last couple of years that we've actually seen something like this play out, first with telecom and now with coal.
Oh, absolutely. I think there's no question that people look at this and go, is there predictability? I mean, predictability is very important for investors. And, one of the problems in America has been the sense that we don't have as much predictability as we'd like as business people, and certainly in the recent past. And I think that's a very, very important thing. I think India needs to be seen as more predictable. From my perspective, sometimes I think that I'm advantaged if India is not predictable because I feel like I understand it a little bit better than many. And so, but if you think about the development of the country, I think it's imperative that there be greater predictability, and the cross purposes that seem to be between various bits of the government and the organizations. That needs to go.